Welcome back to another installment of the Robinhood Challenge. My name is Bruce Wang, and if you guys are brand new, which most likely you are, I talk a lot about dividend investing, real estate investing, and today the markets are up yet again. It really makes you think that when I look back, I really should have loaded up even more on that dip we had. So in today's video, I'll be going over all of the stocks that I've been buying in the last week. Each week I do a recap of what I bought and some of the changes that I've made to the portfolio. For this week, I invested about $1,000 into the portfolio, so let's jump right into it. We are sitting at a balance of $41,000, up 2.2%. About 2 to 3 weeks ago, this was down almost 20%, over $10,000. And now look at how times has changed. We are seeing a $1,000 gain today on the portfolio, and what a relief, man. In the last 3 to 4 weeks, I've been pretty down because my portfolio has been pretty down. You know, it's not a good feeling losing money, but in the grand scheme of things, I think that everything I invested in the last month, I've seen a gain on everything I've invested in the last month. Let's say that. So hopefully you guys did not sell your entire portfolio because of the crash, because we are seeing so many gains in this last 2 days. So I get asked a lot of questions about what website am I using, and this is Simply Safe Dividends. They are not sponsoring this channel or anything like that, but if you guys are wanting a sponsor, like, hit me up. I got you guys. I've sent you guys a lot of customers in the last month. I know that for a fact. So in summary, Simply Safe Dividends is a stock tracker that I use. I input all of my portfolios into there. You can see that I have 4 different ones: Cash App, M1 Finance, Robinhood, and Vanguard. And basically they tell me if the stocks that I'm investing in, if their dividends are safe or not safe. And if they're not safe, maybe it's a time for me to start thinking about selling or doing something with that stock. And if we take a look here, most of the stocks that I own, their dividends are relatively safe, in the 90s, 80s, some in the 70s, and the infamous 2 that I have here, PSEC and AGNC, these are the only 2 unsafe ones that I've been playing around with over the last year. You can also see that I have a bunch of stocks here. Boeing is the one company that I am very disappointed in. They paused their dividend last week or 2 weeks ago. All of these ETFs and all of these stocks that do not pay dividends, they're obviously not going to have a dividend safety score. So if you guys want to use anything that I'm featuring in this video, links are going to be in the description. The brokerages, the Simply Safe Dividends, some of those links are affiliate links, and they will really help support the channel, so I appreciate it. All right, so let's jump into the Robinhood segment for this video, and I'm gonna tell you exactly what I bought this week. So there's been some changes to the portfolio here, and the biggest change so far is that we've seen a gain in the portfolio. So today we saw a 3% gain, up $500, and in the last week we see a 7% gain, $1,100. It's been a long time since we saw some green here. We're still down on the month, 10%. In the last 3 months, we're still down almost 20%. So we've seen a really big comeback since these times. And 1 year, we're down 15%. Each day, it seems like we're going to be doing better and better in the stock market. One question I know I'll be getting a lot is, do I think that we've seen a bottom? I would say maybe, maybe not. You know, the C19 is still around. We don't know the full extent of everything that's going on, but I know every single day there's less and less cases, less and less deaths, and estimates, they still haven't been reached yet. So once that uncertainty gets resolved, I think that we will most likely see a bottom. These companies that I own, they're not doing well. They've been shut down for 2 weeks, 3 weeks now, and maybe even another 2-3 weeks from now, they still might be shut down. So cash flow is not coming in. Employees are not getting paid. Unemployment is going up. A lot of fear and uncertainty is out there. And, you know, even for me, myself, I've been affected severely. I think that if we do not get a turnaround very soon, my tenants are not going to be able to pay me rent for next month. Some of my tenants are not even paying me the full amount of rent this month. So I've been having a tough time as well. I know a lot of you guys are. So hopefully we get through this as soon as possible. And now let's take a look at the portfolio to see exactly some of the changes that I've made. So when it comes to realty income, I've decided that I am all in on this REIT. Realty Income is a monthly dividend paying stock. It is known as the monthly dividend paying stock. And last week I owned about 50 shares and now I'm at 83. So you guys might be wondering, where did I get the money to invest more into Realty Income? I basically sold all of my shares in LTC Properties and took that money and invested it into Realty Income. So I've consolidated my portfolio a lot on Robinhood, and I've also consolidated my portfolio a lot on M1 Finance, which I'll get to a bit later on. So on April 1st, I sold 41 shares of LTC Properties at $28.96, and I moved all of that cash into Realty Income. A lot of the times, I'm always preaching, hold your positions, try not to sell in the panic, but when it comes to LTC Properties, it's done me well over the last year plus now. I've collected so much dividends from them, but I'm not selling that company and withdrawing the cash. I'm selling that company, taking all of that profit or loss and putting it into another investments that I think will be better on for me over the long term. So in summary of the Robinhood challenge, I bought 3 different stocks. Realty Income, I bought 6 shares. AT&T, I bought 0.6 shares, and PSEC, I bought 4 shares. In total, I invested around $315.67. And with that, I increased my annual dividends with this portfolio by $21.16 roughly. So before I jump into the M1 Finance segment of this video, if you guys want to see my portfolio and everything that I update every single week, links are going to be in the description. And let's jump right into it. So this is the Wang Gang portfolio. M1 Finance finally updated their website and their mobile app, and it looks a lot better. So Robinhood has like a green theme, and now M1 Finance, they're going to go for a deep navy blue type. And I'm really liking all of the new animations. Everything looks a lot smoother and a lot cleaner. So when it comes to the value of the portfolio, we're getting pretty close to having it equal to the Robinhood portfolio. That's one thing that I've been trying to do, is to balance it out so that we can see which portfolio will perform better over time. And so far, M1 Finance has been pretty good, especially during this crash that we had over the last month. So we can see that on the day that we're up almost $300. On the week, we are up $500, 4%. On the month, we're not doing too good overall, but over time, I know that this portfolio will do well. All right, so some updates to the M1 Finance portfolio. I want to consolidate this portfolio as well. I'm seeing a lot of the same problems that I've witnessed with the Robinhood portfolio, and that I just own way too many individual stocks. So let's take a look at the holdings here. So right now, I'm currently holding 40 positions, where previously last week I was holding around maybe 50 plus positions. So I've basically consolidated a lot of the pies, bought back into some of the bigger stocks, some of the better stocks that I own in that individual pie. So for example, let's take a look at the real estate sector again. Last week I was holding LTC Properties in here. I was holding I was holding Stag, and another one that I'm completely forgetting right now. But basically, I sold all of those stocks and bought back into Realty Income. Like I said earlier, I'm all in on Realty Income here. I know that we're not going to see a bull run anytime soon, but I'm going to accumulate as many shares as possible at these current levels here. So let me take you into the activities here, and basically, where was it? So here are the changes that I've made. I sold LTC Properties, IVZ, Main Street Capital. These 3 ETFs here, they're great. They're great, especially if you're a beginner. If you want to invest in ETFs and index funds, I recommend that everybody start off that way. There's like a bunch of videos that I've made earlier about investing in index funds and ETFs. So again here, I am not withdrawing any money from this portfolio. I'm reinvesting everything, all the dividends. Every single time that I make a sale from any of these stocks, I'm reinvesting it back into the companies that I already own in the portfolio. Some new additions to the portfolio. Because I sold all of my other finance stocks, I'm investing a lot of that back into JP Morgan here. And the other one was, where's the other one? And the other one is Visa. So when it comes to my finance stocks, those companies that I used to own, they were just getting too risky when it comes to my tolerance. I was doing all of the back-end research with Simply Safe Dividends, and basically all of their dividend safety scores were touching the unsafe score mark, and I didn't believe that those companies could continue paying out at those levels. So that's why I decided to move all that cash, reinvest it into Visa and JP Morgan, where their dividend safety score is a lot safer, and I think over the long term these companies are going to be doing well. Some of the downsides of owning Visa and JP Morgan versus the other companies that I own is that their dividend yield is pretty low. Visa is under 1%, and JP Morgan is actually a lot better, is at 4%, which is something that I really look for. Is like, I want the companies that I buy, I try to get their dividend yield at around 4% or somewhere close to 4%. So finally, let's take a look at the investment that I made yesterday. I invested around $665, 20 different buys here. And these are all the companies that I purchased into. The biggest purchase was into Realty Income, and that's because just that pie was underweighted. So one other thing that I want to show you guys is take a look at exactly how much I invested over the last month. These are all my deposits. I don't make any withdrawals from any of my accounts. I'm not planning to take out the money anytime soon. If you're investing in the stock market, make sure you don't need that cash anytime soon, all right? There's really no point in just putting it in, taking it out, putting it in, taking it out. You're just making a lot of extra work for yourself. So all of these deposits I made in the month of March, $3,500 in the month of March. That is the most I've ever invested all in one time in 1 month when it comes to this portfolio. If we take a look in February, it was around less than 2,000. If it was in January, I just invested way less than 2,000, just $1,200. So we are really moving fast, especially during this crash. When it comes to this portfolio, when it comes to the strategy that I use, I'm really practicing what I preach. And even though I don't want to all the time, I know that over the long term, I think it's going to be the right decision. So now I'm going to take it back to Simply Safe Dividends, and I'm going to show you guys my top 5 stocks that performed very well over that crash that we just had. And this is the overview for the entire portfolio. Annual income, you can see that is at $1,862. So that is about $50 lower than last week. So because of all of the changes that I've made to the portfolio, that is why it's not as high as last week. Just to update you guys. So the number 1 dividend stock that I own, the best performance is from Apple. I own about 2 shares. Average cost is at $200. The second is very surprising to me, which is Intel Corp. This is one of the stocks where I don't have a lot invested into. It's like less than 1% of my entire portfolio, but from the looks of it, I should have put in a lot more money than I already did. Third on the list is also not a big position in my portfolio, but is Microsoft. I own 1.5 shares, and it's less than 1%, but it is up 9.9%. The fourth is the brand new addition to the portfolio. I own just under 4 shares here, and it is 1.4% of the entire portfolio. It's up almost 10%. And lastly, Amazon, which is not a dividend stock, so we can skip that. Lastly is going to be Nike. I own 10 shares, sitting at 2% of the portfolio, almost a 7.6% gains. So those are the top 5 stocks. And now let's take a look at the worst performing stocks of the portfolio. Oh man, it's really tough to look at this. So all the way at the bottom, Boeing Company. This used to be a dividend paying stock, but they paused their dividends for all the reasons that we've discussed earlier. I own less than 1%, so that's not too bad, but it's down 37%. That is horrible. PSEC, AGNC. So when it comes to these two stocks, they are very speculative, all right? They do pay a very high dividend yield, all right? And it's just during these times, all of these more speculative, all of these riskier stocks, they're going to get hit a lot harder, all right? So that's just one thing I want you guys to know. I'm down 37% on PSEC, and I'm down 27% on AGNC. I am aiming to get 100 shares of AGNC, and I'm aiming to get 200 shares of PSEC. It's just that, you know, funds are limited. SPHD is fourth down here, but is not a dividend stock. It is a ETF. And here we go. So number 4 is going to be ExxonMobil. So when it comes to Exxon, I'm still a believer that these oil stocks will come back. You know, we saw a 4% gain in today, and yesterday was like another 2-3% gain. So right now I'm only down 20%. So luckily I bought as many shares as I could over that crash that we had. And the 5th worst performing stock that I have is Waste Management, and it is less than 1% of the portfolio. Almost a 18.2% loss here on this stock as well. But one thing about that is that these two companies, their dividends are pretty safe versus AGNC and PSEC. Their dividends are either they're typically stable or they cut their dividends a bit. Like AGNC, they cut their dividend last year, if you guys are brand new and did not know that. So that is the weekly recap of the portfolio. Hopefully you guys like that. We are not out of it yet. You know, we've seen 2 good days in a row, but don't think that this is it. All right, there's a lot of more uncertainty ahead, so just be careful. Don't go all in on don't go all in just because you think that we've already hit a bottom. So if you guys want to know more about the videos that I made, go check out these videos here, life-changing videos. Subscribe if you haven't subscribed, drop a like, hit the notification. Follow me on Instagram, follow me on the second channel. I'm trying to make as much content for you guys as much as possible, and I'll see you guys next time. Bye.